Hi, my name's Arnie with PipMonkey.com, and I just want to welcome you to this free glimpse. This free glimpse is designed to show you the PipMonkey trading suite, and we feel it is absolutely the best suite for training Forex on the market today. Part of what makes it so great is the fact that it's simple. It is so simple to do that you can master it within just a few weeks. Within just a few short hours and days, you'll feel a sense of comfort and control and confidence that you really, it's very difficult to get any other way. So what we're going to do is I want to get into just letting you know that what we offer here is what we consider to be the next generation of Forex training. PipMonkey, if you don't already know, is a training support company. We're not a broker. We don't trade other people's money. We don't trade your money. We don't give you trading tips. But what we do is we provide solid training about how price moves and how to successfully navigate what we call the freeway of Forex. And this freeway is a risky, treacherous freeway without a doubt. If you go to any website, you'll see that there are indicators all over the place, or disclaimers rather, that are telling you how risky it is. And it's true. The market itself is bigger than all the equity markets, the stock market combined. It's over something like $4 trillion traded every day. That's such a huge number, I can't even relate to what that even means. But I do know this. It means freedom, and it means lifestyle, and it's an opportunity, especially with a limited amount of time. Because of the way the market works, you can trade it basically 24/6, so to speak, and it can be customized whatever your schedule is. If you only have an hour a day, 2 hours a day, because it's 24 hours a day, you can fit it in. All you got to do is be willing to maybe lose a little sleep here and there, and you can or reschedule your sleeping patterns if you wanted to, or whatever. This market allows you to do it. So it's very exciting what it does. So let's get right into what it offers in the first place. But before we get started, I want to go through a couple of terms that are critical for you to know as we go through this little presentation. First and foremost, you're going to hear the concept called candles. Candles, you can see the candle itself. You see these blue things that look like a candle. Well, that's the body of the candle here. That's called the body. And you see all these bodies going up. And then the other part of it is the wick. And the wick is this thin line that goes off the body. So you have the body and you have the wick of a candle. And you can see that these are blue candles where price is increasing. And then you can see it kind of fade off and go into green candles that are moving down the other direction. That's as simple as it is. Next concept you're going to hear or term is long. What's long mean? Long means price is increasing and above what we call at PipMonkey 007. 007, you're going to hear about this in a minute. This is our premier indicator. It's the cornerstone of trading with an edge that we offer, and you're going to see more about it in a second. But suffice to say that there's a yellow line, and you're going to see that price in blue candles, as it's increasing, that those candles are above the line. All this is above this yellow line. So that's what we mean here at PipMonkey.com. That's what we mean by long. Short, on the other hand, is the exact opposite. It's green candles that are moving where price is moving down, and it's below the yellow line, or below 007. So that's what short is. Then there's the concept of what PIP means. You're going to hear that. That's an acronym, if you didn't already know. It stands for Price Increment Position. Currencies are traded in fractions of pennies, and pips are those fractions. And it's like this. If you look at this scale over on the right-hand side here, you're going to see that there's a number, you know, it's 1.3775 and then 1.3750. Well, that's a difference of 25 pips. Okay? So that's all. That's just how we measure the movement of currency. And just to give you something to relate it to, 100 pips represents roughly 1 penny of change in a currency pair. So 25 pips is a quarter of a penny. So that's an exciting thing. Now here's how you make money. It's with a lot size. Lot size has to do with how much you're actually trading in the quantity of those currencies. And a way to look at it, you can define it as this. We call it trade size or pip value. A lot size is you can look at it like this. A lot of people think that when you're trading currencies that you're actually buying and selling the currencies. You know, you're actually not doing that. What you're doing is that you're controlling a contract that allows you to buy or sell first. You can either buy and sell later at a higher price. That's called going long. Or you can actually control the contract for when it's decreasing in price, and that's called going short. And then you can close those contracts out for a profit or a loss. Hopefully you're closing them for a profit, but that's the game. That's how it's worked. So you could be trading, for example, a $10,000 lot, which is considered a mini lot, which relatively means about $1 in pip value, roughly speaking. Okay, so if you were trading a standard lot, which is $100,000 of currency, that would be a $10 pip. The opposite direction, you could trade a $1,000 lot, and that's called a micro lot, and that would be trading 10 cents. So every pip is worth either 10 cents, it could be worth $1, it could be worth $100, it could be worth whatever you want to make it. That's what lot size is, and that's what really speaks to the term of leverage. Okay, and then so moving right along, the PipMonkey suite is based on a trading ecosystem. Okay, it's based on 3 different parts. The first part being trade management. Trade management is the system and the rules that you follow that you believe in because you know it works. When you've traded a system and you followed the rules and you know you're getting success from it, that's going to give you a high degree of confidence. And that's why that's the first and foremost, that's the first pillar, if you will, to the ecosystem. The second being money management. Money management, we were just talking about lot sizes. I have always said this, and I'll say it again, is that the Forex markets are full of undertrained, over-leveraged people. It's critical that you understand the power of managing your money, and in Forex, it's a two-edged sword. You can leverage yourself up and you can magnify your earnings, but it can also work against you and it can magnify your losses. So when you're trading and you're working with your money, you have to learn how to manage it properly. There's, the lot sizes itself, having what they call stop losses in place, just kind of like a safety net for a trapeze artist. In case something goes wrong, your positions are going to be closed before it loses too much money, and you put those tolerances in place before you even start trading. Those are important to understand. All that's really important, but what it does for you is it gives you a sense of comfort. When you know you can manage your money properly, you're going to have a great sense of comfort because it's not a mystery, and you know you're in control of it, and it's very important. And then lastly, but not least by any chance, matter of fact, it's probably more important than the first two, is how to manage your emotions. You hear a lot of times we talk about people that have an anger problem. They lose their temper. Well, when it comes to the emotions of trading, one important emotion that's talked about a lot is patience. The character trait of patience that translates into that emotional response of being someone who's a patient person versus impatient. If you're impatient with Forex, it's going to cost you dearly. So you need to learn how to be patient, because why? Because you're waiting for rules to be followed, because there's what's called the setup. You need to know that the rules are coming into play, into alignment, so the trade is setting up. So you can see that this is where I enter the free way of Forex right now. And so it's critical that you learn how to do that. Managing your emotion gives you a sense of control. Because, you always hear about people being able to control their emotions. And you have to be able to control your emotions, especially when it's real money. Because that's what will happen to you. You can trade monopoly money, demo account all you want. At some point, you're going to switch gears into live money, and that's where the emotions are going to come into play. And your pulse is going to go up, you're going to feel it. And if you haven't managed and worked on managing your emotional state, you're going to have to, there's no way to escape it, is what I'm trying to say. You're going to have to learn how to manage it. And we teach you keys and tools about how to do that. Okay? So moving right along, we really just do that one pip at a time. We're not interested in just selling you something, a membership to this, and saying, well, now go do it, good luck, go after it. We actually want to follow through and support you. A buddy system is real important in this business, and I think it's critical. We offer what we call live chart review meetings, webinars that you can come on to, and it's great because you can come on to that meeting, and if you have a question, you can chat it in and I can repeat it, or I'll just unmute you and you can ask your question out loud to the webinar audience. Everybody gets to hear the question. I'll repeat it, and then I'll get into the live charts, and we'll go and show it, and we'll explain the answers to your questions. Everybody gets to benefit from it. So it's good for you to come on to those meetings, even if you don't have questions, because you're going to hear other people's questions, and it's just going to confirm and review and confirm what you already know and what you're learning. And it'll accelerate your growth, your confidence, and your comfort and your control, so you can be trading with an edge. And we do that, like I said, one pip at a time. So Here's something too I want to mention too. Up on YouTube, we have a PipMonkey system overview video. If you haven't already watched it, I encourage you to go watch that video. You can just go in the search bar and type in PipMonkey Pro and it'll pop up. It goes into depth about some of the things that I'm going to talk about here, but I'm just going to sidestep that right now. I want to jump right into these live charts. But before I do, I just want to confirm or just highlight something. What our suite does is it shows you the turns. Do you remember Wall Street with Gordon Gekko? He made a statement in there, one of the lines he said trade the turns, or excuse me, trade the turns, trade the trend and stay away from the turn. Why did he say stay away from the turn? Well, the reason is because nobody knows what the turn is. See, if you have hindsight, and you know hindsight's 20/20, you look at any chart and you can say, oh, I can see where the turn was. Well, can you say that when it's happening live, candle by candle? No, you can't. You don't know if it's the turn or if it's just kind of like just a temporary little blip in the other direction, then it moves back into the same direction it was moving. So how do you know when the turn is? The suite shows you the turns and it confirms them for you, so you know when the turns are. So what does that mean? That means you know when to get in and you know when to get out, and that's as simple as it is. Okay, so let's get into the live chart. Let's get into that live chart review real quick. Okay, so here you can see the charts. This is today. What is today? Today is November 21st, and you're looking at the charts right now, and we are at 13:30. This is Eastern Standard Time, military time. Basically, that's what time is that on the West Coast? We're basically 10:30. We always talk in terms of chart time. We keep it on East Coast time, so that's what I'm talking about here. But let's look at that in terms of what the market did. Matter of fact, here's a great example. Let's look at the market here. You can see, I'll set this up so you can check this out. I want to highlight two indicators very quickly, and I'm highlighting them. See that gold yellow line that I just talked about? We mentioned that in the terms about long and short. Here it is on the chart on the left, in the chart in the middle, and then the chart on the right. Okay, 007, that's our secret agent. That's why we call it 007, because it's the cornerstone of what allows you to trade with an edge. It shows you when you're long and when you're short. Simply put, it's like this. We deal with a concept called multiple time frames. That's why you see a chart on the right, and you see a chart in the middle, and you see a chart on the left. These three charts are all different time frames. The one on the left is a 15-minute, the one in the middle is a 2-minute, and the one on the right is an hour. And watch the overview at PipMonkey Pro on YouTube to get into the details about this. But just suffice to say this. When price is above 007 on all three charts, which it is at this point in time right here at 11:12, you can see we moved up here, we moved up at price, and then what did it do? Price started retracing, and that's always what price does. Price does not move in a straight line. It does a zigzag. So it's moving up and down as it's moving sideways. It's moving up and down as it moves up or down. Either way. This case, it moves up, and it's moving up and down as it moves up within each candle and candle to candle. And then what does it do? It does what they call retracing. It retraces, we call it a breath, and it breathes back until the point, and guess what? The indicator right here with this dot popping, I'm going to highlight this indicator right here. This lime green line that I'm showing you right here, along with this red line, these are strength indicators. The red shows strength indicator price decreasing. The lime green shows price strength indicating an increase in price strength moving up. And you can see, plus these little numbers that showed up in gold, that also shows you, important, that those show a strength indicator. So the entrance to the trade was right here. And let's do this. It was so simple. It shows you right here, and you're going to ride that up to this edge, to this band, this red band up here, 30 pip trade. If that was a $10 pip, you just made $300 in basically 22 minutes. That's not bad. What if you were trading a $100 pip? This is a powerful suite. It shows you exactly where the turns are. It's very, very simple. Now look at this. Here's the other indicator I want to highlight real quick. It's this band one. You see there's a blue band down the middle, and then there's these red bands at the top, red band at the bottom. That basically kind of shows you when to get in, when to get out. Shows you that your entrance was down here, going long, you're above 007, and where do you get out? When it touches the band. Because that band represents what they call standard deviations. And that just means that the number of deviations that are considered to be standard which means that as soon as you hit that area, it's probably going to move back against you the other direction, which in fact is exactly what it did. Price never really got much higher, and then it moved against you and then crossed 007. So now you cannot even trade it. What time was this? That's 12:30. What do we have here? 12:30 represents right in here. You can see it turning here, and there's the turn. It showed you the turn. You're out. You took your 30 pips, you're gone. You're not confused thinking you're going to trade this little area. This can get you chopped up like crazy. So that's really how simple it is when we say that it shows you the turns. And again, the suite shows you the turns, and it's a sweet thing that it does it because that's what gives you that ability to trade with an edge. Okay? So moving right along, how do you get started? You get it started with trade management. And the way we do that is through demo trading. Demo trading, we do it 3 ways. The first way is you want to practice following rules. Okay? The rules are all spelled out. They're in writing. And you just follow them. You get to know them. Every indicator in the suite kind of tells a story. And pretty soon you're going to learn what that story is. And because of the very nature of what we're doing pattern recognition. We're doing what's called reactive pattern recognition, which means instead of trying to do a predictive type of technical analysis looking at patterns, we're doing more of looking at patterns right now and a reactive way of trading. That's why we have 2 real-time indicators, so you can react to those indicators in real time right now and make entrance or exit decisions based on it. It's real simple, and it's fast. Okay? So by following those rules, you're going to see the patterns repeat over and over and over again, and you now become very comfortable with those patterns, and you see them so much where you go, oh, I've seen that 100 times. And that just helps you follow the rules all the more. Okay? Once you've done that and you've got familiar with the rules, next thing we want you to do is I want you to learn how to break the rules. I want you to break every rule we have consciously. Why? I call it testing tolerances, because it's like this. Any manufacturer that makes any kind of product, they always send their product to a testing company. And the testing company, for example, let's say you manufacture an ink pen that has a little clicker on the top. They send it and they stick it in a machine, and it's going to click that clicker until it breaks. Why do they want to do that until it breaks? Because they want to know the tolerances. Same thing with you with your trading. If you never actually know what the breaking points are, know why we say don't break this rule, then you're always going to be curious about whether it's really that important, right? So I don't want you to feel that way. I want you to know for the fact that when you've traded with following the rules strictly, and you have that body of knowledge, then you've also broken all the rules. So now you understand what the ramifications are of breaking rules. You combine those 2 bodies of knowledge together, and you're going to have the ability to do the 3rd step, which is now you're going to execute 20 trades in a batch, in what we call a controlled batch. And what do I mean by that? I just mean you can't cheat. Many times I'll sit down with people and I'll say, let me look at your trades. Let's review what you've done. And I'll look at their charts and I'll pick one. And I'll pick one where they lost money. And I'll say, okay, tell me about this one. And here's what everybody says. Everybody goes, oh, that one right there? Oh yeah, that one actually, if that was real money, I wouldn't have actually done that. Well, that's nice. That's nice when it's demo money. But when it's real money, you don't have that luxury. The minute you click that mouse, you're committed. Okay, so you need to do 20 trades as if it was real money, which means you can't, pick and choose which trades you're going to believe that they're the ones that you really meant to do. You do 20 in a row, and whatever your track record is, that's what it is, because that's real trading. When you have a positive track record and you know why you got there, now guess what? You are ready to open a live account. That's an exciting time because it's time to get real. And you can start making money. And this doesn't have to take months and months. This can take a matter of a week, maybe 2 weeks at the outside. Some of you might be even doing it faster. The suite is so simple and it's so good as far as how it shows you what to do. You can be on it very quickly. And so basically the PipMonkey suite, again, as you can see, it gives you the confidence, the control, and the comfort which allows you to trade with an edge. So I appreciate you listening. Hope that made a lot of sense, and we're going to look forward to hearing from you. Please give us a call. Contact the people that invited you to this meeting, or if you came online yourselves here, you can call us directly at 1-800-498-5006. That number again is 800-498-5006. Again, my name's Arnie. We just appreciate you coming on board here and hope to see you soon. And come into some of our live chart reviews as well, because those are available to you to plug in as well. If you need to see this again and see it more in depth, plug into some of the live chart reviews. Matter of fact, we have one scheduled here in another 17 minutes. You're more than welcome to come on board. Okay? So again, thanks for listening. Have a great day.